Sandeep Tandon joining in. He's founder and CIO of Quant Capital. Sandeep, thank you so much for speaking with us, and a very important time to have your voice for our viewers as well, just to make sense of what's going on. Is the worst of the tariff fear behind us simply because what more after 50? Anything after 50 is just incremental. So at least you're starting from a place of realization of how bad this is going to be. Is that the way to look at it right now?
Yeah, up to partly you're correct, but I think beyond 25 also everything is not just a number, because even at 25, certain industries are not viable. See, we don't have to look at absolute number. We have to look at a relative basis. So if what Bangladesh is levied or Pakistan or Vietnam or China, wherein you have to look at from competition or EU or UK. So it's a relative game. It has absolute value has no value.
Sandeep, then, hi, very good morning. In that context,
Yeah.
I was studying the latest fact sheet from your mutual fund house, and I was looking at the Balanced Advantage Fund. And this is what I use personally to gauge how bullish a mutual fund house seems to be. And you've utilized as much room as possible to buy equity. 80% is what you have, more or less, and fixed income is 20%. Does that indicate that you as a fund house do not see too much of a drawdown for the Indian equity markets from this point?
To be very candid with you, neither we are too tense or too excited about anything in India as of now. The relative basis, if you look at in India, is actually underperformed globally. And we believe that particularly US market is showing signs of complacency, which means a probability of correction is not ruled out because now we reach a stage where it's more vulnerable. Our perspective in India is anyway underperformed. Okay, people last 1.5 months, if you look at people who were worried about this tariff related challenges, participation has on the lower side, FI short positions on the higher side. People are just lying low. Okay, the conviction is completely missing. With that background, market cannot fall very sharply. Okay, and obviously it can't rally also significantly because conviction is completely missing. So we are talking about a very range bound market. Obviously, in a range bound market becomes a very stock specific thing. As you understood our portfolio, we are more focused towards domestic play and we are more focused towards the in large infra name, hospitalities name. And we are still optimistic on pharma. If you ask me any big thesis we have in our portfolio, which is nothing to do with the tariff also, because these are exempt sectors. So I think that's the area we still like it. And it's a quite well balanced portfolio which we are trying to look at. Definitely, I'm not too bearish on the market also.
Sandeep, one of the big talking points, of course, has been crude. And if we are indeed required to move away from Russia, the expectation that we will have to buy maybe $2 more expensive, does that really move the needle? And at this point, the kind of negotiation, is it more on principle than anything else?
Apart from principle is, I think, is about market practice. Wherever you get the best price, you will try to lock in. So the way we look at this market from a crude perspective, I think it's that crude is also not going to go anywhere. Rather, it has potential to correct from the current level because we believe there too much consensus getting built about the DXY, where everybody's believe that below 100 is going to collapse now. We have been bearish on the DXY for a while, but from a very near term or medium term perspective, let's say near term only, I think dollar index has potential to spike up, which means all commodities price has potential to come down, which talks about the crude, whether talk about the precious metals also. Again, don't mix up with our long-term view. We have been very constructive on precious metals and silver in particular. But from a very near-term perspective, I think the XY can spoil the party. So I am slightly I have a, I'll not say very negative thing, but I think oil has potential to consolidate and correct from the current level rather than going up.
Sandeep, in terms of using the current turbulence as an opportunity, do you see that confidence coming in? You told us a short while ago that neither are you tense nor are you euphoric about Indian markets right now. But that is a broader view. If I ask you to narrow it down a bit in sectors, are you seeing companies, are you finding companies and sectors that are exciting you right now?
Yeah, I think yes, few opportunities do you obviously you are getting it, but I think that as I said, that overall excitement is missing. When I say overall excitement, number has been slightly subdued. India has been under pressure, so multiple psychological factors are there which is affecting the market. I think it's all sentiments ultimately is a very important phenomena which is required for a sharp up move in the market. So we are in a very that way challenging environment, but the way I look at it is that when you have a very range bound market, then obviously the stock specific activity will be more important rather than even generalizing a broader market itself or the specific sectors. So I think India centric sectors should do very well because from a longer term perspective, we think there's no challenge out there. Earning cycles, either they have some of the stock or sector, either they have already bottomed out or have potential to bottom out by September or so. But market will always be at least a quarter away from that. So market will discount that news much earlier. So I think we are coming closer to the earning cycle should bottoming out in a quarter's time or so. So I think it has time has come to be very selective in the market. And I think the way I look at the pressure is obviously is more visible on the Nifty 50 stocks, particularly the FI centric stocks, if I have to say, because they have been moving away from the market because obviously they play a relative game. And if they're getting a better opportunity in China or Hong Kong or other Asia markets or other global markets, so it's a very natural money will shift. But if I have look from a purely from a domestic perspective, I think I like to focus on the domestic and the stocks, and obviously pharma and generic is also part of that thesis. So because we believe this is one area, there is no impact on the tariff fronts, and they're completely exempt sector, and they have shown good numbers. So it's not about like as compared to IT, somebody says on the currencies is again slightly weakened right now. What should I play? And a lot of people got trapped in the currency game in right from January. We have been vocal about that IT will correct sharply, and that's the one reason we as a mutual fund house has a very insignificant or negligible position in the IT space. So we instead of buying IT or rupee play, I will play through pharma, way relatively under own sector right now, from even from the FI perspective. And opportunities are visibility is very clear, numbers are quite clear. So I think one has to be very, very stock specific opportunity, and there enough opportunity, but you have to be slightly more patient in this challenging environment, and you have to keep your expectation bit low.
Sandeep, good morning. Niraj here. Sandeep, where
Yeah,
does actually so okay? Before I come to where does the change come from in pharma? Is there also a presumption that even if there were to be some tariff-related issues coming up, there will be pricing power and supply strength which will help them tide through that, or is the thesis that there will not be a tariff issue on pharma?
see, so far, whatever statement we have heard of the release which has come from the White House very clearly says in particular section, these are exempt. Okay. And these are not exempt for India as of now, it's globally exempt. But even let's say he's talking about that he's written to some of the 17 global innovative companies at some point in time, some tariff will come. I think India is in a position to even pass that, assuming let's say 10% tariff comes. Okay, I'm again saying an academic exercise right now. I think Indian generic is in a position to pass anyway because the generic as compared to US formulation, the gaps are very large, 70, 80%, 90% gaps, so it's not very meaningful and it's a very essential part of your life. You can't survive without medicine. So you will don't mind. And I think that small also 10%, even distributor community in US will easily absorb it. So I think it is coming from strength and coming from the background that India has been one of the large supplier of drugs to US. So with that background, I think it's coming from strength rather than coming from any weakness, and there's a compulsion not to touch this sector. So I think it's a win-win situation. Even 10% tariff come or 15% tariff come doesn't make any difference. They're in the position to pass. But as of now, let's celebrate this exempt space.
Got it, got it, got it. Sandeep, where does the change come in? So I've through this interview, you've said that you are neither bullish nor bearish. You don't expect people should keep their excitement or expectations low. When does the change come? Does it change come when at some point of time the GDP growth were to pick up? or do you reckon that multiples can expand or flows will determine that? What can happen?
So obviously, market is always about the combination. So right now, let's talk about flows. When I said in the beginning also that FIs, they play relative game, and obviously they have luxury to deploy in any market, which we don't have right now. So obviously, given the outperformance we have seen in the developed markets and the Asia's centric, India has been a laggard both in the emerging market as well as the developed market, and even compared to MSA world also, we have underperformed over a period of time, which clearly means money is shifting. So purely from a liquidity perspective, we are not in a great shape. The only good news is that domestic mutual fund flow still remains pretty stable. So that is one way of it. Second most important thing you talk about in terms of earnings related challenges. Obviously, that's the one area, as I said, it looks like either you say that earnings is going to correct and fall substantially, or I look as opportunity, they are closer to bottom. The moment you say that's a bottoming process, then obviously your conviction is much higher and you look for a buying opportunity if you believe it's a bottoming process. As a house, we believe we are in the bottoming space. So that's a one area of support. But the way I look at in terms of, since the excitement is completely missing, so the incremental returns, if I have to look at even from these stocks, will be on the, you will not get that sort of return what we are used to in the past. I think, but when cycle changes, okay, now it's very difficult to pinpoint exactly when cycle will change. When US market and the Asian center market goes to a sharper correction or deeper correction happening in developed market, then money can flow back to India because India has been underperformer. So on a relative basis, we might have that opportunity. And I think that opportunity can come in 2 months' time. And answer is yes, because I expect US market should correct, and it should correct sharply from these levels, because a lot of data point which we look at, what we spotted in January 2025 also, we are seeing signs of that vulnerability is rising and as complacency is getting built, and money flow towards developed market is significantly high, and some amount of complacency is also visible, or arrogancy is also visible in terms of body language also. It's a very classic sign what something similar happened. I said earlier also that the month of January, February, he was taking a very tough stand. And the moment market crashed in March, he was forced to change his stand. And I think that cycle is again going to repeat. And if I will not be surprised by end of September or beginning of October, there's a high possibility that they might change their stand, and market will also digest whatever changes are happening, whether this is getting challenged with the
Sandeep,
US food. Yeah.
Sandeep, just but taking that theory further, in the context of India and what he is saying and his action on India, where is that pressure going to come from? Because US markets are not necessarily reacting to the ludicrous tariffs and commentary on India.
So I think the way I look at from Mr. Trump perspective, I always say he's a businessman, he is a deal maker, he's not going to break the thing, but he has his own way and own style of doing things. Okay. So he will has pressurized techniques, the way I call it management by chaos. That's a thesis which he follows. And I think whatever we are going through right now, or the noise or narrative which is getting built, I think these are all great posturing. This posturing really helps in settling down or negotiating hard. And I think so far India has also taken a very, I will not say a tough stand. I think India has taken a quite measured stand, and I think which is very constructive from long term in India. So I'm not too much worried about it, because ultimately it's a need based thing. You can make any noise, but you just let me give you a small example. Yesterday, some China data was there. China export has actually gone from 3.5 close to 4%. Okay, and export with China has with the US has fallen, but ultimately overall export has moved up. So obviously there's no new buyer has emerged like America. Okay, so obviously goods are getting shifted to US in some structure or some arbitrage which is happening. Let's say example today UK is 10% and all of Indian companies are there. They can easily shift to UK and it happen. I think Trump understands these things. Answer is yes, he is threatened that, but ultimately they also have to survive. So when you take a very hard line or some posturing you do, then you look for these soft issues and you will tend to ignore because you are also beneficiary. So I think market always align that thing. And that's the reason I'm not too much worried about it. If I look at purely data, ultimately US is buying in some form or other, and it's indirectly coming to from China only.
Completely. Like we've been saying since the beginning of the show today, Sandeep, all of us are in the mood for tacos for lunch. So we'll see if there's going to be a taco trade. Thank you so much for speaking with us, Sandeep Tandon there.